Leaders Club, online panel discussion by inspirational leaders of innovation and drivers of change. Today we discuss business model pivots in the era of pandemic, Series 5, disrupting industries, creating new business models and finding new opportunities in crisis. And let me briefly introduce myself. My name is Nadine Mistirova. I'm independent director of the National Alternative Investment Management Association and advisor to a number of GPs in private equity, real estate, venture capital, and hedge funds. And my co-moderator today is Gianpaolo Parigi, venture capitalist, chairman of a single family office. And I have a number of honorable speakers with us, serial entrepreneurs and investor side representatives. It's Amar Krishna, co-founder of Chifling, David Lechner, CMO of Scream, Trey Buchan, SM at Metric Theory, and James Wing, associate at Griffin Gaming Partners, and Julian Kwan, CEO of One Rent. And let me start with a brief introduction. Amar, could you please join our panel with a brief introduction of yourself and the company?
Sure. Thanks, Nadya. Hello, everyone. Thank you for joining us today. And I'm Amar. I'm one of the co-founders of Shuffling. It's the kitchen assistant app. We call ourselves AI-driven kitchen assistant. The app is available on App Store and Play Store. Please feel free to download. And in this pandemic, we have been helping people cook, and we have seen a surge. So everyone is staying home and cooking, and so our app users have gone up, and the time people spend on our app has gone up. So happy to answer any questions in the food and drink category and kitchen related stuff as well. Thank you.
Okay, thank you. Would you share with us what was the impact of COVID-19 on your particular sector?
The food sector has, so we are not into delivery. So delivery is the one which was kind of impacted over the US, as you can see. But we are completely on a software and a mobile-based app. So what we have seen is a surge. So our users have gone almost 3 times starting March. And the time people spend on an app has gone up more than 5 times. So a lot of people are staying home, they are cooking a lot of recipes. Some of the really good insights I can give is baking. A lot of people have been baking a lot. Pandemic was kind of a blessing in disguise for us because of the uses, but what the world is going through, I don't want to say that it's been good. It's not been good for many other people.
Thank you, Amar. And are you in fundraising right now? Could you please share your case in terms of fundraising challenges and opportunities?
Sure. There are challenges right now. The VC money is drying, especially in the area. I haven't seen on the early stages what I have been hearing from my other fellow co-founders that Series A and seed stages are pretty much drying up. But in our case, we are well funded right now, and we never raised money from VC. We raised from a company, Robert Bosch, the German appliance company. So we are well funded. So in our case, there is no problem there. But in the overall sector, not in food and drink, but the whole seed and Series A stage, especially in US, has been pretty much drying. And I'm hearing from the other co-founders that it's pretty tough to raise money right now.
Thank you. And what should be in the top focus of attention for startup founders in the current situation and investors in the current crisis?
For the startup founders, I can say cut down your capex. The other needs you don't want to do, travel, other expenses, and try to stay lean as soon as possible. If you don't need hiring, you shouldn't hire as well. But we haven't laid anyone off. Our team is pretty much the same what we were in February. And we are hiring more people. So our team is distributed between Bay Area and India. We are in Bangalore, India. So we have been hiring people in Bangalore right now as well. My advice is we have been staying lean for 3 years of our existence, and so that didn't make any impact on our budget or anything. So that's my advice for startups at our stage, Series Seed, Series A, is that stay lean, don't spend on things which are not needed.
Thank you so much, Amar. And Thank you. And Trey, would you also join the panel and introduce yourself briefly?
Sure. So Trey Buchanan, Senior Manager at Metric Theory. Metric Theory is a digital marketing agency out of San Francisco, New York, Denver, and Salt Lake, and Orange County. My background is advertising, paid media for B2B businesses, SaaS, for startups, all the way up to publicly traded companies.
Thank you, Trey. And Julian?
Hi, everyone. So my name is Julian. I'm the CEO of OneRent. So our vision is to make rentals friendly. So we want to create a friendly environment for people to lease, rent, and maintain their properties. And we provide an end-to-end solution for that. So.
Thank you, Julian. And James?
Yeah, thanks, Nadya. James Wing, associate with Griffin Gaming Partners. We're one of the first of its kind stage agnostic venture vehicles focused exclusively and solely on the video games industry.
Thank you, James. And David?
David Leichner, I'm the CMO at Scream. So there's an influx of exponentially growing data coming in from digital transformation, coming in from 5G on the telecom side. We enable enterprises to analyze much more of their data and to do it much more quickly than they're able to today. So we have a data acceleration platform enabling them to do so.
Thank you, David. And Gianpaolo, our co-moderator today.
Yeah, good day, everyone. Gianpaolo Parigi here, a private equity investor as chairman of a single family office and a venture capital investor. As partner in ventures in India, we invest in nano-cap and micro-cap. And in Europe and in the United States and other parts of the world, we invest up to Series B. So welcome everyone on the panel today. And Nadya, please, back to you.
Thank you. So James, what role does tech play in social gathering, to your opinion, in terms of different segments?
Yeah, happy to answer. It's pretty integral from what we've seen. It's been in the age where we aren't able to see each other physically. Digital avenues are sort of the preferred method now. We've seen significant uptick in gaming playtime, time spent in app, internet gaming, things like that, where people are able to connect virtually, whether that's Jackbox over Zoom or like Call of Duty Warzone with 4 people cross-platform across various different regions. It's been really amazing what video games have done to fill the void, if you will, during this age of COVID, when people aren't able to leave their homes. And we've seen that reflected in the market and the sales numbers.
Thank you, James. And Trey, what impact do you observe in the current pandemic for your sector?
Yeah, so marketing and advertising has been pretty interesting, and because we get to see a lot of different businesses with different models, try to understand what they're feeling. Typically what we saw through the pandemic was there's a big question mark in March where people didn't know what was going to happen. And so ad spend came down pretty drastically for pretty much all segments of the market. And then as we went into April, it actually went back up. So as confidence started to gain in what was happening around the country, we know we're not out of it, but at least we know more than we did, I think, March and February. People started to advertise more, but the messaging has changed. It's been less about business as usual and more about how businesses can actually help people operate during this time. So that's kind of been the biggest segment change, is just really the messaging for these businesses.
Thank you, Trey. And Julian, you also have a massive disruption in real estate services. And you also, one of your colleagues also addressed that issue in the keynote discussion at our VCTV. Would you also comment on your observation and what is the top priorities in terms of new opportunities or challenges in your industry?
Yeah, I think the real estate industry is going to undergo a little bit of a massive tectonic shift. Yeah. So I think while Trey and James, you guys are working in industries which I think are probably going to be affected positively in the long run, real estate's going to really change, and some areas are probably just going to die. So if we look at sort of how the industry has changed over just the last few months. A lot of the players in the market, a lot of these short-term rental operators, they got massively hammered and probably won't exist. A lot of them will cease to exist. So Airbnb will almost definitely survive, of course, because they're so big. But a lot of the auxiliary suppliers to Airbnb, thinking about the people who actually lease their properties on Airbnb, a lot of them are going to die, and that's really going to hit that bottom line. I think thinking beyond sort of residential real estate, I'll make the bold sort of, I guess, bold claim or the bold prediction that commercial real estate is also going to be very affected, almost perhaps to the point where commercial real estate becomes more and more obsolete, because as things start to move online, as more of us live in virtual worlds, as more of us sort of buy stuff online, and as more of us move away from that space, I think the whole world, the whole ecosystem is going to change. And at the end of the day, why do we need commercial real estate if it's not to go there and actually use it as an office or as a retail space?
And Julian, so elaborating along those lines, do you see space for conversions of those assets, or are you simply imagining, straight demolition and parks and parking lots?
Yeah, I actually wrote a little article on that, where I think basically what's going to happen is that there's going to be suburban regrowth. So the central business district, or as Americans will call it, downtown, I think is soon going to become almost completely obsolete. Because if we think about it, I guess logically, why do we congregate in a central location in the middle of the city? I think the main reason is because of work. Well, I think we can all start to see that, the way that we're sitting here now, the future of work is changing. We're going to be able to influence things. We're going to be able to do things from a distance. And once that's the case, there's really no reason to live close to the city. And once people no longer live close to the city, the auxiliary services, everything else that is built up around the city, those will start to drop off. And those would have less reason to exist. And so these buildings, which in a lot of these major cities are worth, they're worth, up to several $100 million. Yeah, I think they're going to collapse in value. Probably will be able to find some use for them. Floor space is always somewhat useful, and this is going to be a gradual process. But I think we will eventually head towards, maybe we will head towards parks and a greener and more lively future, I guess.
Yeah, definitely. There is a lot of truth in what you're saying. Although I think that the trend in the world is very set. That most of the population in the world live, as of the last few years, in large urban sprawls. And ever before, I think we passed 55 or 58% of the world population living in large cities. So I think that the trend will not be reverted because of COVID. Although I agree with you that a lot of, in fact, I even publicly predicted, that real estate will go through a severe crisis, particularly commercial real estate, because of course there will be redundancies and there will be, I think, a lot of reconversions. But I don't think, that we will really migrate to the countryside. In Europe, for example, we have large cities like Moscow and London and some others that have already started this over 15 years ago, where especially wealthy people who are not obliged to commute on a daily basis have developed secondary offices in their private homes or very close in the suburbia to their homes, but rarely they go downtown. So I don't think that this is really increased more than that, because I think wealthy people are already set. I think who's caught in the middle, it's the certain section of the old middle class, and that I would say packs most of the commuters, and for sure there's be some opportunities in real estate for speculative interventions by aggressive investors around the world in that space. Thank you, Julian. David, I have a question for you. You are an expert in big data. Do you see new sets of data coming about as a result of the COVID-19? Anything new as a data class that we will have to keep into consideration in the near future?
You know, if we look at just at the IT spend that's really been, you know, growing tremendously over the last couple of months, it's been primarily on communication and collaboration tools, mobile devices, bandwidth and network capacity, and of course the information security around that. So I think there's no question that, you know, digital transformation projects are going forward. Those will drive with them also a lot more data. There's no question that all of this work from home, all of the collaboration tools, when we're talking about collaboration tools that are, you know, all SaaS based, is driving a lot of new data. All of the medical telemedicine, people aren't able to leave their homes, but they still have to be checked out. So telemedicine is now booming. You know, so that's another area where we're seeing a major growth in data. So, you know, whether it's healthcare because of telemedicine and because of all the research that's being done, whether it's telecom and the 5G implementations, whether it's, you know, finance and, you know, the digital transformation, whether it's the governments like India who have set into, you know, into motion digitalization, that, you know, that they're only going to be working with e-wallets, with messaging. All the local governments have to work with messaging. So, you know, there's definitely a tremendous drive. You know, the data is only going to keep growing. So, you know, we've seen these predictions by IDC and Gartner and all the others, you know, about getting to zettabytes of data. There's no question that we will get to these tremendous, you know, these tremendous data stores. The big questions will be what companies and organizations will do with those data stores and how they can leverage them.
Would you believe that distributed ledger is one of the ways to go?
Sorry, I didn't. It faded a little bit.
I said, would you assume that, you know, blockchain and technologies like the blockchain on a distributed ledger type of pattern are the ways to go? So
for some applications, yes, and for some applications, no. It really depends on the application. So, you know, it depends on the application. It depends, for example, if you're dealing with a very long supply chain. If you're dealing with, you know, things like payments across countries, starting out with individuals, maybe leading into bigger organizations, you know, deals that you need to, in the past, you might have needed government guarantees or major loans taken out in order to back those deals. You know, so it really depends on what it is that we're talking about. And I think for a lot of them, blockchain definitely will be a way to go.
Thank you. Nadya?
Trey, would you also address some of the new challenges and opportunities you have in your sector?
Yeah, I think with new challenges in general, I think a lot of businesses are trying to figure out how their buyers are actually behaving right now. Specifically in SaaS and B2B in general, cash has typically been king, and with people not sure how this, you know, pandemic is going to end up, they're holding onto their cash, you know, more closely than before. So what we're seeing, particularly in the B2B sector, is that people are taking longer time in buy cycles. So you might create a bunch of opportunities for your sales team, but the sales team's having a harder time closing those. And so we have to change our messaging and change the value proposition of a lot of the products to kind of match up with, you know, the concerns that a lot of the buyers are having. And particularly when it comes to messaging, I think it's really important to understand, you know, what your buyer is concerned about during COVID. And, you know, a lot of it is going to be distributed workforce, how people can work together. And if you hit on those points, I think you can actively sell just as well as you did, you know, prior to COVID, you know, assuming that the business hasn't been impacted and it's not in, you know, hospitality or anything like that. But it's really just trying to find a good mixture of what your sales team can push on in terms of value props for your product, but also meeting the expectations of the consumer.
Yes, Samar also mentioned in his key recommendations for startup leaders this advice on cost cutting and at the same time boosting efficiency. What would be your comment on that?
Yeah, I think with cost cutting and boosting efficiency in general, for paid media, it's just being really good at the basics. what I recommend for a lot of my clients at this point in time is if your budgets are pulling back, let's not focus on some crazy new channel for testing. That's not where we're going to see gains. What we should be doing is refining our strategy, making our creative better, our messaging better, making the nurture sequences to the sales teams better than they were before. That's where we're going to see the biggest impact, not running into some of these additional channels, which you do see some value. If I do see a channel that I think fits perfectly, I still will recommend that. But shiny toys and new objects aren't necessarily going to perform right now, if you're going to be pulling back budget by 50%.
Thank you, Trey. James, would you also comment on that on your segment?
Yeah, absolutely. Could you repeat the first part of the question again?
Yeah, so we discussed the new challenges and opportunities and how to not only survive, but to succeed. On the one hand, you need to do the cost cutting, and at the same time boost efficiencies and maybe gain new markets. So what would be your recommendation how to balance on all of this?
Yeah, I mean, I think it's all about, it's certainly an opportunity looking at past inefficiencies of certain things. For example, let's say like something like concerts touring. There's a lot of people attached to it. Some certain exhibitors in the past haven't been as successful with it. So you're seeing a lot of things like the Travis Scott Fortnite concert, which was attended by an exorbitant amount of people, significantly more than the Marshmello one, and kind of transitioning business models to ways that make them digitally native. Not that saying there will never be a Coachella again, but if people are able to have those experiences digitally, I think that, one, there's significant upside for people involved, and given that less parties need to be sort of in the mix there. It takes a lot of people to put those productions on. So I think looking at past items that could be problematic, problematic in terms of COVID and gathering people, and then thinking of ways to adapt those for 21st century and the incredible age of technology we're seeing. So.
Thank you, James. And Julian, what would be the advice in your segment? So how to balance this cost cutting with boosting efficiency and gaining new markets?
Yeah, I'd like to. So I've already talked a little bit about what I think is that future of my particular segment in the real estate sector. But I'd like to echo one of Trey's points. Basically, the idea that everything is slower. So the velocity of cash seems to have slowed down dramatically. And I'll apologize, on behalf of businesses to Trey right now, because we're probably the type of business that is a little bit slower in responding and a little bit slower in signing new deals. But I think on the other hand, a big part of that reason is because on the investment side, everything slowed down as well. It used to be that you could get an investment after 2-3 meetings, after let's say 2 weeks or so. Now, for some reason, everything is dragged out for, let's say, 2-3 months. I think just the overall cash environment has changed dramatically, and how business operates and how entrepreneurship works. And I guess right now, my gut is telling me that this is probably a long-term change. So when it comes to generally seizing opportunities in an entrepreneur environment, whether it's in the prop tech sector or somewhere else, I think right now the most important thing is to be cash efficient, to be lean, and to make sure that you make every penny count.
And let me add a comment on this, Julian, because as an investor, I don't see really that the investment sentiment has changed, or investment commitment have been slowing down as a result of, I would say, lack of clarity on the future ahead. I think the delay in some investments has been mostly caused by the inherent logistics of many financial firms and in large investors having been disrupted in their day-by-day routine, reallocating staff at home and reshaping their policies. And this has caused some backlog in what they were doing. But there are very large deals being closed every week. even in these periods, and they have been occurring in the last 3 months. And you all know that capital, like rust, wouldn't sleep. So the reality is, there's a lot of, but I would like to really debunk this myth that capital is drying up. There's a lot of dry powder available, and as I say, it's going to be utilized just as these companies, these investing firms are, catching up with the new normal, and they are, because also large banks are reopening also the physical offices, although with some, differences to the past, obviously in terms of the shuffling the employees around. But I think, they're all getting back into their firing positions, and the market is continuing. But I have a question for all of you, and you forgive me for asking this, but I think it would be quite intriguing also for our audience. Why would an investor, and the question is for the four of you, why would an investor have to invest in your company? And I would like to start with James. Can you tell me what would be the most compelling reason why an investor should invest in your firm?
Yeah, video for right now more than ever. I think video games have proved their staying power over the last 20 years. We've seen gaming stocks be abnormally resistant to market trends like this, especially when people are staying home, staying inside. In March, we saw in-game spend reach, I believe, 1.6 billion. There's about 3 billion gamers on Earth today. And with the acceleration of the adoption of things like 5G and cloud gaming and the constant increase of computing power, gaming's more accessible than ever. And I think if Griffin were looking for funding right now, it's the data speaks for itself in terms of who's doing what when they're not able to leave their home. A lot of gamers are joking it's the golden age of gaming right now. Significant that we've seen like the most robust first-person shooter market. Esports are still climbing. It's a really good time to be in video games. Unfortunately, it is Julian, to your point, it looks like gaming's on track to come out of this positive. I wish it was under better circumstances, but it's not. So I think just the resiliency of gaming and the indisputable bang for your buck, so to speak, of entertainment hours per dollar. The gamers are really receptive to good quality games and gameplay.
Thank you, James. Trey?
Yeah, I think the paid media world's pretty interesting in the fact that I think we respond well, and I guess it depends on your segment of customers, but we're not super invested in hospitality and travel, and so we've benefited from that for sure. And so the segments that are performing well, we can double down on, and companies that are still growing during this time are going to be looking for partners to grow with. And so I think digital marketing and paid media is always going to be growing in that regard. It's just a matter of can we be the best partner possible in delivering the right message at the right time to the right person, and I think that's where the main value is for paid media.
Thank you. And David?
So we discussed previously the growth of data in the market, and we have already shown, and we have use cases of bringing value to major companies around the world, whether it's LG or it's some of the big banks or other telecoms or edtech companies. And once you can bring that value and show how, by being able to analyze that much more data that much more quickly, you're able to change the way the business stakeholders are doing business to propel the company forward. We have a very compelling story for investors. And I agree with you that the capital has not dried up. I can't really give out information right now, but as they say, watch this space next month for an announcement from Scream. And there are a lot of deals that are still going on. And I think that the companies that are either not suffering or are showing that in this type of an environment, they're actually able to show opportunity, then the VCs know where to look for that opportunity, and they have the capital to capitalize on that opportunity.
Thank you, David. And Julian, how about an investor coming to your company? What would be your unique selling proposition at this juncture?
Because we're the future of this space. So I'd like to, I guess, respond to your comment, Gianpaolo. I think it's undeniable that deals are still happening. We're not in an apocalyptic situation where there is no money at all. But I think it is a very different environment to the cash-rich environment, at least in the US, that existed probably, let's say, 6 months ago. And I think in our sector, in my sector particularly, in prop tech in particularly, I think easy money has allowed a lot of what I would call fake business models to exist. So I would make the argument that deals like WeWork should probably have never happened. And I think that once the money dries up, a lot more companies will face this issue. A lot of these so-called media darlings in prop tech, or venture capital darlings in prop tech, they'll start to face the music. And a lot of them aren't going to survive this period of time. So I think essentially at the end of the day, what sort of technology is going to innovate the field? What sort of technology is going to dominate the market? I think it comes down to doing things that has always worked, but doing them better with technology. And I think that's what OneRent does. We're in the correct asset class, residential real estate, commercial real estate. Probably don't want to touch it right now. We do things in I think, a very traditional manner, but we do it with AI. We do it with technology. We do it without any of these business model gimmicks that a lot of these other large, perhaps formerly unicorns did. And I think that's ultimately why an investor should put money in us, because we are the future.
Thank you, Julian. Nadya?
Yes, and Julian, would you also comment on, in the current situation, what would be your advice to those companies in fundraising, and what would be maybe your recommendation how to attract attention of investors in the current environment when they mostly revise their own portfolios and having their own issues, but some of them are quite active?
Yeah, I don't know whether you guys have heard of this, or other people have heard about this, but there seems to be a new term floating around, and there's this idea of a camel. So there's an article circulating that I think is getting pretty hot, saying that we should be chasing camels, not unicorns. A camel being a cash flow positive, a profitable company, basically, that perhaps doesn't have exponential growth and doesn't have that billion-dollar valuation tag, but has that ability to survive, long term, right? A unlimited run rate. From what I've seen in the market, from talking to entrepreneurs and venture capitalists, I think that's what's happening, right? So maybe in different sectors it's different, and I'm sure, James, you'll have something to talk about the gaming sector, but I think we've moved from a easy cash, high growth environment to an environment where essentially every dollar counts, and you better make that dollar count. And you as a company are responsible for your own survival, and you should not rely on sort of, venture capital and easy access to money bailing you out. So I guess in short, profitability is much more important than growth, at least for the foreseeable future, from my perspective.
I like that, Julian, because the bailing out is a nostalgia takeover in disguise. Trey, what's your comment on that?
I think in general with Silicon Valley, I think even we saw this, a ways back with, Uber taking multiple rounds to kind of hold off until they had to go public. I think this is something that's kind of existed for a while, and now they're going to pay for it to some extent. In terms of people looking to raise money, I think, like Julian said, like it's going to be how much value can you show in a more in a world where people aren't as together as they once were. I mean, we're seeing large capital rounds being raised by companies that are basically pushing SaaS products for a diversified workforce. Even before this, I don't know if you guys have been in San Francisco, but we used to see ads for Monday all the time on all the billboards in the city. And I think that's, what we're going to continue to see companies like Slack are crushing it right now because they right place, right time, and I think investors are looking for those deals. I believe Andreessen actually just finished a deal for a company in that space as well a couple weeks ago that they just announced. It was a pretty massive Series A or Series B from what I remember. So I think if you're outside of those spaces, I think what you're trying to do is keep your head up until this clears. But if you're in a space that can take advantage of the diversified workforce and your product and your value makes sense during this time, I think you can definitely raise money right now.
Thank you. James, I have a question for you on the gaming and software industry. Of course, the industry is amassing good reserves in this moment because of the capitalization of people staying home, kids staying home, and adults also having more time into their hands to play. Do you see an opportunity and a danger for the gaming industry at this juncture? The opportunity is, of course, that with the money that it's coming in at this moment, there could be a diversification effort that could be run by the gaming industry as a whole in trying to maybe combine the digital and the physical activities of the gaming together. I mean, I see that as an avenue and opportunity. And at the same time, at the danger of resting on the laurels when other industry sectors have been suffering. And as I say, the gaming instead has been accumulating good profits at the moment in general. Would you think that there's a double-edged sword? Do you see it as I see it, the opportunity and a threat by not seizing the opportunity? What do you think?
Yeah, absolutely. Could you elaborate a little bit more on the digital versus and physical merging that you alluded to there? Would that be something like Toys to Life or location-based entertainment or things like that?
Well, I think, and again, I'm not an expert in the gaming industry, but as an investor, I see the sector that is amassing huge profits should leverage both financially and operationally on the success of this. That could be a short period, because obviously when the world starts in the new normal after COVID, there will be a phasing out of certain benefits. People will not even sit and watch Netflix all day long. So the reality is, there will be, but this is a time to capture some of those niches out there, or anyway, explore and invest in those niches because there is the capital available to do so. I mean, do you see that as a good thing to do, or as I say, just seize the day, enjoying and forget about tomorrow?
Yeah. Absolutely. So this is, I think, a perfect segue from the previous question around fundraising. Given the explosion of kind of free to play right now, we're seeing just the revenue's good and like I alluded to, 1.6 billion last month in March. But mostly what we're looking at is huge KPI numbers in terms of downloads and hours spent and time played and things like that. Now, not all of that is sustainable. A lot of it goes to apps apps or games that allow you just to interact with people. And will that hold up when people are allowed to go outside again? I don't know, but it probably doesn't bode great for it. So I think there's a real pressure to harness the power of these numbers that you're able to get during COVID, and not only present them in a meaningful way, but understand how you can make something sustainable out of this when people are able to go back outside. Pokemon Go pivoting to allow people to play in their homes. Like I mentioned, Travis, that was, I'm sure, in the works for 6 months, but Travis Scott doing a concert in Fortnite. It's kind of all about, at least from our perspective, from the investor side of the table, it's about reading into the KPIs and understanding the sort of gaming narrative of, is this something people want when they can go outside again? And kind of looking at the lens through that, because the KPIs are exploding pretty much on anything you look at that's digital, and so being cognizant of what is and is not real is really important right now.
Thank you. Over to you, Nadya.
Thank you all. So what would be the top priorities startup leaders should continue to sustain and succeed in the new environment, David?
So first and foremost, have a very strong hand on your finances. Make sure, and somebody said this in the beginning, to keep an eye on the cash. Very much be in touch with your current customers. So we believe very, very strongly that at this point in time, gaining new customers, depending on the segment of the industry, it could be difficult. So definitely to work closely with your existing customers to ensure that they have what they need. I'm a personal believer in not doing away with marketing budgets, even though overnight we went from having, let's say, half face-to-face marketing and half online to being a completely digital marketing organization. We did this really, really quickly. So I think you have to definitely keep an eye on the expenses, keep an eye on the market, make sure that you're still out there. People will remember you. By the way, this will touch on everyone. Just as a reminder, the Spanish flu hit the end of 1918, right? 1917, 1918. And in the United States, the 20s were known as the Roaring 20s. So the wealth doubled in the 1920s. Now, we won't talk about the depression at the end of the 20s, but let's look at what happened immediately after the virus. So I think, this idea of going into bunker mode, I don't think people are going into the bunkers. I think the investments are continuing because people realize there are probably 10,000 labs out there working on a inoculation for the virus, and something will come about, sooner than later, and probably a lot sooner than in many other previous challenges that we've had in history. We have communications better than any other time. So I think we're going to look back in 20 or 30 years and say, oh yeah, there was this pips on the map, and they called it COVID-19, and it affected us, and we did things that we never thought we were going to do, like shutting down for a few months in our homes, getting to know our families better, getting to know our friends better through Zoom, and how we kept our companies going during that period by taking the correct steps to ensure that we have viability going into the next, whether it's 6 months to a year or a year to 2 years.
Thank you. And Trey, what would be your advice to that?
Yeah, I think it's fairly similar to what David said. A lot of my clients in particular went from a lot of field marketing, big events, going to Las Vegas at those big trade shows, moving it towards digital. And I think especially with Dreamforce being canceled this year, big Salesforce conference, there's a lot of hanging cash in the air. And so you got to decide, is it worth it to reinvest in digital? Is it worth it to put those allocations somewhere else? And just be really smart about it. If you need some run rate in order to make sure you survive out of this, don't be afraid to hold on to that cash and use it where you need to. That being said, digital and that's where marketing is right now. People are sitting in their homes. They're on LinkedIn, they're on Facebook, they're on all these different places that we're seeing just crazy high KPIs. Like James was saying, the in the gaming space, people are spending more time there. It's the same thing with social media and everything online. So be smart where you put your money. If you're going to invest digitally, make sure you have the correct messaging. Make sure you're supporting your current customers as well. I think it's easier to hold on to your current client base than it is to get new ones. So make sure you treat them well.
Thank you. And Julian?
Yeah, echoing the sentiment of both Trey and David, I think the theme of the second rendition of the Roaring Twenties is probably going to be O2O, so offline to online, I think. So yeah, so I think until we can upload our brains into the cloud, until we can live in a Minecraft house, I think we do have to remember that unfortunately we as people are bound to this earth. So I think there's going to be a lot of different innovations around how we're going to transfer that physical reality to the online environment. And right now, for example, we're talking over Zoom, and 20, 30 years ago, that would be ridiculous, right? This is sci-fi, right? Talking to each other over Zoom from let's say 4 or 5 different countries, several different time zones. It's absolutely insane, the fact that we can see each other like this. I think, echoing what David said, we're going to look back in 30 years and look at COVID not just as a blip, but as this turning point where, yeah, it was a pandemic. It was super hard to get through, and we had to make some medical advances, and there was a change in the way that we did things. But it's also as this impetus for massive societal change, where it's probably going to be, this pivot point where we transition from being a mostly offline culture, a mostly offline civilization, to very, very much almost completely existing on the cloud, where all aspects of society, from tech first people like ourselves to our grandparents, will have that online presence.
Thank you. Do you have anything to add, James?
Yeah, this is a tough one to go last on. Those are great answers, everybody. Yeah, look, without retreading on everything that my fellow panelists have said, I would just say the one thing that Griffin kind of looks for, at least in this age, slightly lessened capital, and this is just sort of an internal thing, is we like a singular focus in a company. Typically, what we've seen over the years is the waters can get a little muddied in sort of early stage A round, if you're too spread too thin, right? So like a little too often, I think in gaming and the startups, you'll come across a play, and it'll be like, okay, so well, it's a streaming service that has also is betting. Oh, and the betting's crypto, and it's like, well, like, wait, which one is it? I think that singular focus is extremely beneficial right now to really hammering down one vision and perfecting that, and then going the Discord route and figuring out exactly what you want to do around streaming or chat or what have you.
Yeah, it's,
thank you so much, James. And Joran, would you also join the panel and introduce yourself and the company?
Hi, sorry I was late. There was some technical issue about the link. So my name is Joran de Wacht and I'm CEO at Seatel.io. We're in the event technology sector.
Would you also briefly outline what are the current challenges and opportunities in your sector? What do you see as an impact of COVID-19 on your situation?
Well, from a business perspective, obviously, is that events, by and large, have stopped happening and have been to the end. And this will probably go on for a little while. At the beginning, everybody was hoping for some kind of V-shaped situation, but it certainly looks like that's not going to be the case. And I think there are a number of conditions before things can start again. I think what we now see is that there are the three main actors are the event organizers themselves and the technology companies that support them, like we do. The second actor is government, but the third actor, which has come up in the last couple of weeks, is the attitude of ticket buyers themselves and people wanting to go to events or not. So whereas governments so far have banned events and now looking at reopening them, event organizers are keen, of course, to start as soon as possible. But what we see is that the attitude of the audience and the ticket buyers is still quite unclear. A lot of people at the moment would not go to events even if they were open and allowed to go, and even if there are proper social distancing rules. So what the industry at the moment is focusing on is social distancing and trying to get as many events back on as possible, but with the caveat that you need a certain critical mass before an event becomes profitable. And so if you can only sell 30% of your tickets, it may be that you don't want to organize the event because you're going to be organizing at a loss. So all these aspects are playing, and I think the aspect of social distancing and end of the lockdown will play a role. But I think there's also an important role for the audience to play, who will say yes or no, we want to go back to events. And also we want to make sure that if I follow the rules, somebody else also follow the rules. And I'm not putting myself or my family at risk when I go to an event. Obviously, if a vaccine would be found and made available, that would change things. Also, there is, people are looking into trying to find medication, which is the second route. But I think, whereas in the beginning people were saying we should be back to normal reasonably quickly, within the industry, you heard certain people saying that, it will not be until 2021. And some people say it might actually take 2 or 3 years before we're getting back to a modicum of normality. So tough is the abbreviation of all of that.
And what would be your top advice, the recommendation for startup leaders to survive and sustain in that new environment, and for investors proceeding with their investment strategies, or maybe also experiencing some challenges with their current portfolios?
Well, I think when you're a startup, the advice is the same as always. Find a problem that needs a solution, and that has where you can issue a product or a service that people for which there is a market. The challenge there, of course, is that situations are changing. So the question as to what is a problem and what is a product is volatile, and the level of uncertainty is higher than it usually is. For investors, it's kind of hard to say because the level of uncertainty is high. I do think that as a structural problem is that investors, in the way they have behaved over the last 20 years, have become more of a problem than a benefit to society in general. So I think it would be nice if Corona crisis would change the attitude towards investors. I'm particularly thinking about the concept of shareholder primacy, which I think should be removed as quickly as possible from our society, because it is causing a lot more damage than it is creating value.
Thank you. And do you have any advice for the companies who are currently in fundraising during this difficult time?
Well, cash is king, obviously, at the moment. So if I see in the event sector, I see people getting, closing investments or continuing to close investment rounds. So it's still possible to do so. And I think that one of the things that will happen, I think the event sector will be less prone to government bailouts, and therefore the efficiency of a crisis by pruning out those who are not good enough is going to be more efficient. And so I think there will be opportunities in the next 6 months to buy businesses that are inherently sound but will run out of cash.
Okay, Gianpaolo, do you have any questions before we go for the final round?
Well, I have a comment. I liked very much what I heard from Julian, James, Trey, and David, even down to the last statements. If I can summarize it, so I leave the space to them, I would say that looking at COVID a few years back from the future, we would see probably the equivalent of a continental divide that has moved us in a sort of attitude adjustment period from fancy schmancy technology to get serious and let's use the technology for things that are really important. A lot of people finally, not of course probably people like us that were more in technology, but let's say a lot of the external user and later adopters, I think that have finally come to the realization that technology is there for a lot of purposes, and it goes from very I would say life-saving applications like in the medical and healthcare to the nicer ones in gaming and entertainment or edutainment. But I think that the world that now has finally realized that technology is here to stay, and with good cause. So with this, I will leave the floor to you, and thank you very much for everything. Who wants to take it from here, Trey?
Closing statements, or
what would you leave us as a wrap-up statement for this panel?
Yeah, absolutely. I think I think everyone needs to change how they're messaging to their customers. And it's not just around how great your product is, it's the value that your product is in the space right now. You know, does your product actually help someone save cash during this? Does it make their lives easier? And not easier as in saves them an hour a day versus, you know, for $20,000 a year of licensing. Does it make it actually worth it to them in order to make their business survive during this time? And that's going to be really important. And then also changing that messaging away from "we're with you" to "we should definitely be with you, and here's how we're going to do that." I think that messaging is going to be important. So that's my two last little tidbits there.
Thank you. And James, how would you wrap it up?
Yeah, I would say I would probably encourage companies to find other ways of interacting internally. This is not a plug for you to play video games, although if you choose to go that route, we certainly have, and it's been successful. I think that this is a new opportunity for people to find ways to interact with colleagues in ways that they haven't before. We've been doing like Call of Duty tournaments and playing with our senior partner Peter Levin. We've been playing quite a bit actually, and it's an interesting role reversal, right? Too, because he doesn't play as much as me and our principal Anthony, who play a little too much. But it's made for really interesting dynamic and awesome dialogue in just a different context. So I would encourage a lot of companies to look for other ways of interacting internally, just as another thing to do during this quarantine.
Thank you. And David, what's your final tip for the day?
So I think what I'm going to take away from this period is twofold. One, we've recently opened up here in Israel, and the speed with which people have returned to the cafes, the beaches, the schools, everything has been incredible, meaning they just wanted to break out. And so I think that, this whole idea of we're going to be living online is not real. I think people need people, and people want to be, in their circle of colleagues and friends and family. But I think what we've discovered over this period is that we can share that into more and more circles of our acquaintances and our friends. And, in a way, we were closed up in our homes, but we became a lot more global. So if there was a wedding with 20 people, it was now out there for 500 people around the world to see, when you would never have considered putting a video or a camera up to have people part of your wedding who are sitting in Moscow or in New York, in London. I've seen weddings literally on 5 continents. So I think there's this idea now that, we will be with our friends and our family. We will continue to travel. We'll get to people, but the online will bring us closer to the people. So if Facebook at some point, brought us closer, now the online Zoom communications, digitalization will bring us that much more, closer. And that's what we'll look back at, as being the great divide, how, being brought into our own homes has taken us actually to better communication globally.
Thank you, David. And Julian?
Yeah, I think the one thing that I think will happen definitely is change. I think the world is never going to be the same again. I think one thing that Joran said that really stood out to me. It's this challenge against shareholder primacy. And I think in many senses that's a core tenet of our capitalist society. Is it going to be able to be challenged or not? I don't know, but I think that it's this sort of time, these sort of transitional times, where we can actually ask these questions and where there's an actual possibility of something happening towards them. I think that, and I think the other 3 panelists, I think we all exist in areas that are just going to become really massive very, very soon. Yeah. So I think paid ads, for example, are going to become the standard type of ads. I think, when we're talking about data, like we're going to soon have data on everything, especially as we go more offline to online. And I think gaming has become mainstream. it's like so crazy that gaming has suddenly become mainstream, right? Everyone games now, and not just your little like Pokemon Go type games. Like these really, really hardcore games have become mainstream. And I think each of these changes are just the beginning. And we're going to see genuine societal changes in how we act, how we live, how we invest, and how we do business. And I'm very, very excited for the 20s.
Thank you. And Nadya, how would you like to close our panel today?
Thank you, everybody. Please join our events and also different formats of online panel discussions, roadshows, and keynotes and masterclasses. So thank you all for the discussion, and see you soon.